guys, and welcome back to Move Up with Mike, michaelglass.com. Thank you for taking the time to check out our videos, our weekly weekend stock market technical analysis report. Before we begin, we always like to start off with our disclosures, and you know what it is. Any trading that you make is solely your own decision. Trade at your own risk. There is a risk of losing money. Everything we do here is for educational purposes. Future results are not guaranteed. So this is our weekend stock market technical analysis trading plan. We're going to look at our calendars. We're going to look at some key support resistance levels on our charts. And there will be an education spotlight at the end. I'm sticking with this. Investing should be more like watching paint dry or watching grass grow. And again, what I find working with people who have contacted me is that they're looking to get in, get their feet wet, and trade. What they're not looking to do is identify a specific uh, setup and trade just that. To be a successful trader, you have to know who you are as a trader, define that, master that, do that really well, and then you scale. You don't always have to keep looking for new indicators, new setups. Find something that you're good at, define who you are, and do that really well, and then scale once you become successful at it. So, when we look at the past week, for the most part, we had a good week for the market. You can see most of the indices were up for the week. Gold was down, and crude oil was down just a little bit for the day. I'm sorry, those are all for the day. What's important is notice that we've come back a little bit. I mean, we were down 25%, over 25%. And now we're only down 16%, 10%. Look at the NASDAQ, only down 5%. And you'll see when we go look at our fangs, you're going to see why the NASDAQ is only down 5% when you look at Amazon and Netflix, when we look at that a little bit later. But gold is up still 10% here. But look at crude. Crude is down 62%. And the thing about that is that crude rolled over its contract. So if you look at the original contract, it's actually down more. But crude rolled over on Thursday, Friday, I can't remember which day. And so the price went up to $25 from $20. So it's, crude is definitely taking a beating. Hopefully, well, let me say hopefully, because I know I personally, I'm here in North Carolina, and I paid $1.30, excuse me, $1.34 for gas the other day and was giddy. So no, I don't want crude to go up, but I do know that people's industries, their jobs are dependent upon crude going back up. So it's a double-edged sword there. Earnings seasons did kick off this week. J.P. Morgan did come out as one of the first banks to kind of talk about the economy and what we could probably see in terms of unemployment and what they're doing. As I mentioned, crude oil has rolled over its contract. So there really wasn't that much going on. Basically, we're just seeing the market kind of drift slowly back up. The stimulus is starting to kick in. Some of the banks are kicking in. But what's the negative of that? PPP, EIDL, they ran out of money. I do think a catalyst, unknown catalyst this week is once Congress does their job and refunds the PPP and the EIDL, that the market may, kick in and go up a little bit more. I do believe this week also some of the unemployment, the unemployment part of the CARES Act actually started kicking in, depending on your state. I know in North Carolina they don't start unemployment for the CARES Act until April 25th. So that's not until the end of this week, beginning of next week. So, so depending on your state, one of the things I've learned in looking at this CARES Act and the EIDL and the PPP is that, there's a lot of antiquated systems that a lot of these states are running on, and that's why a lot of this money took a long time to get out. Not a lot really going on overseas. Of course, a lot of people are looking at these certain countries are starting to open up as our country is. But, Italy's starting to open up. I think I saw Sweden. Certain countries starting to open up. And so we'll see. Everybody's going to be watching to see if there's going to be a second wave. On Friday, Gilead announced that people taking their drug are staying in the hospital at a shorter amount of time. So it's not a vaccine, it's a treatment drug, but they're showing that it is helping people get through the sickness faster. And so the market really did rally pretty, as you can see on Friday, the market did really rally pretty well on that. However, on Thursday, we did see another 5 million people file for unemployment. So, you went from, what was the first one was three, then we had six, um, another five. So, we're well up to, I believe we're up to about 20 million people have filed for unemployment. And it's just going to keep going waste. And as I just mentioned earlier, because of some of the states in this antiquated system, even if you applied, especially the people who are independent contractors, self-employed, a lot of states have not updated their system so that they can apply. And so, even though the money is there, these people are not getting money. So, what's key for this week? Netflix is reporting on Tuesday. There's going to be some more banks reporting this week, and also some more airlines. Again, just getting that data, getting that commentary on what the virus, what this disease is doing to our economy, can move the market. Um, Unemployment again on Thursday. There's a variety of economic, Michigan sentiment. There's some little things going on, but I don't think they're going to have the impact on the market. What's moving the market is COVID-19. So when positive news comes out, the market's going to go up. When negative news comes out, the market's going to go down. And more importantly, as we continue to open up and as different states open up and there's no second wave, there's no hot spots generating, that's going to be positive for the market. Let's go to the charts and take a look. All right, so let's go ahead and start off by looking at some of our indices. We'll just start looking at the ES, so our S&P 500. So what we talked about the last couple of times was this downtrend line, and you can see that it did hold up for a little bit, and then we finally closed above it. And once we finally closed above it and got above this little move right here, we continue to move up. So now we're starting to get back into this zone above 2,800, and you gotta look at this little gap down here. So I think even though I had this line here just below it because of what's going on over here, this gap down is really probably our next resistance level that we need to watch at, which is right about 29.60, 29.75. I like round numbers. So what's the important thing here? We're above 2,800. I think that's important. You can see the support going on over here. We've closed above it, so that's good. Although we technically did here, and then we came right back down. But this is a nice gap up here. Again, this was the Gilead news sending the market up. So now we're into this range. So let's see what's happening. Will 2,800 hold up as support? And can we get up and fill this gap? Let's go take a look at gold. So gold, again, has been in this range, and now we're coming back down to the top of the range. We actually got above it, and now we're coming back here. So you can see basically 1,700 range area holding up as resistance. So if we can stay above that on gold, we can start to see it moving up. But again, we know gold has an inverse relationship with the market. So as the market is starting to really start to push up a little bit here, I wouldn't be surprised to see gold to enter back into this trading range and certainly maybe come down into this 1,600 level if we can get it closed back down into this price level. Otherwise, what was resistance is now support. Crude. Now, just to give you an example, I'll go look at you. This is to show you how crude has rolled over. So you can see that it's 18 in the old contract. But again, crude did roll over. And so let's go to the new contract. And you'll see the 25. So what's important about crude? Well, what's important about crude, let's come over here. Let's get a horizontal line. We got the gap to watch. And we certainly have the bottom down here to watch too. Whoops. Gotta certainly have a downtrend line to watch. And even a more aggressive one coming down here. And as I always say, why did this wick come right up here? Downtrend line. So we'll see what's going on with crude. The Saudis can stop bankrupting everybody. Uh, Crude will certainly start to move back up. Don't know how long it can stay down in this level, but I feel like I should just keep buying gas while it is this cheap. Now let's go take a look at our FANG. So Facebook. So we talked about the ES getting above a level, and so you can see here's Facebook getting above that level. Um, and so we've got this gap up here to fill. Still have not filled that gap back up. So this is certainly good. There's certainly some swing going on here around 190 to watch, and also up here at 197ish to watch as we move a little bit higher. Whoops. Just using the free account on TradingView. Apple. Um, as you always know, I'm always amazed why things start. I don't even remember where I drew this uptrend line from, but notice that that's exactly where we start. So Apple certainly moving back up. Hasn't quite got to the highs. I was certainly, from where we are now, the next place to watch is 305. Switch this over. And then to see if we can actually get above the gap. So I would probably move up to here. So I think 277. So there's my range right that I'm going to be watching right now. 277. That's as the bottom. And then there we go. 305. This is the range I'll be watching to see what happens there for Apple. Now I told you why is the Nasdaq so high compared to the other ones. Take a look at Amazon. Look at that. Amazon making new recent highs here. So it is off to, and why is that? Well, you know, everybody's at home buying things, buying supplies, and Amazon provides everything now. So, challenging Walmart. So I would watch. Let's see here. What's going on right here, and of course, what's going on? Retesting where we're at. Amazon on a tear, on a tear. Um, and then again, let's take a look at Netflix. Netflix reports on Tuesday. Same thing going on here. So watching 393 and watching as it's testing the highs. Let's finish off with Google. Google looks more like the S&P 500, sitting right at a level here. I definitely think let's draw that in. So we're right above it. So as long as we can stay above 1280, we can certainly try to go test this gap. All right, so for our education spotlight today, I want to talk about the footprint chart. What the footprint chart allows you to do is to see inside the number. So a typical candlestick, you have an open, high, low, and close, and that's good information. I used to trade off the candlestick charts. But a footprint chart allows you to see inside and see who's winning at each one of these price levels. So a lot of times you're saying, why was there these evening stars and these morning stars, and what's going on? You can see things faster, sooner, because you can see buyers coming in and winning. You can see sellers coming in and winning. So it's important because it allows you to look at each price level. And, there's different experts who tell you to look at it diagonally, and that's how you form your balances. Delta at price, you talk about people talking about that. It's important to see who's winning at each price level. That's a different conversation. what's important for me is to convey to you that you really should be using footprint charts. Now, I keep both up, especially on my 30 minute. I like to see, because I'm old school, I've been trading for a while. I still have some candlestick charts up over in the corner. But for my analysis as a scalper, as a swing trade, I use footprint charts to really help me at key price levels analyze what's going on to see if I should take the breakout, if I should be trading the reversal. By being able to see what's going on inside the candle, you get a better idea of seeing what's happening. So, I am putting together a little room to help people pass their combines. I passed the top step combine, and I am on my way to passing the earn to trade combine. Here, hold on a second. Let me show you. So here's a screenshot of, again, step two of the combine, and was able to get to the price target in 5 days, 4 out of 5 days winning. And right behind it, I'm starting now a uh, gauntlet, and I'm doing a smaller one because I was thinking, most people aren't trading with 5, 10 contracts, so I just want to show that I can pass both of these. So what my goal is to open up a combine on May 1st, just so that people can come into a room, watch me do it. I'll help you pass. We'll pass together. But again, why should you come to my room? I'm showing you I've already passed Top Step once, slowly on my way to passing the gauntlet, passing two of these together, just to again show that I know what I'm doing. And it's going to be a free room. Come hang out for because I want to test out some things. So just to get feedback, I'm doing a room for a month for free. Come out, hang out. And how do you do that? Well, let me show you. So again, we're going to have a little trading room. michaelglass.com, gauntlet. One way to sign up for one of the combines. And then if you go to michaelglass.com trading room, that's where you'll see a little sign up form. I will get your email. I'm not going to be spamming you. But once I open the room at the beginning of May, you'll get an email from me to come hang out with us, and we will be profitable together. Check out me out on our social media. Move Up with Mike pretty much across the board. Thanks, guys, and I will see you next time.